In this video, I'll provide an update on what's happening in private mortgage lending as of the end of the first quarter of 2024. I'll touch on lender sentiment, loan volume, securitizations in the secondary market, interest rates, and what most lenders are concerned about at this time. The information I'll share was gathered from talking to many of our lender clients and from attending two private lending events in the past few weeks: the California Mortgage Association's Spring Conference and the Innovate Conference hosted by Gerasi Law Firm. Only a small percentage of lenders in our network told us that 2023 was a record year for them compared to the past 5 years. For most private lending companies, 2023 was a tough year with extremely low loan volume and low profit margins. The year started off slow, but many lenders informed me that February was better than January and March was amazing. The high loan volume in March has given many lenders a big boost of confidence and a strong outlook for 2024. Many lenders are bullish and aggressively marketing to find deal flow. Many are hiring to grow their sales teams. Many new lenders are entering the market, and many new debt funds are being formed. There are still lots of capital available in private lending, but deal quality is the main challenge. Another thing I've heard from lenders is that they are dealing with a bunch of loan defaults, both maturity defaults and payment defaults. So many borrowers asked for loan extensions in 2023, and typically it's not feasible for most lenders to offer more than 1 or 2 extensions. Borrowers that don't have enough equity to refinance or sell their properties are going into foreclosures. Some lenders have sold their non-performing loans, but many of them are going through foreclosures directly and taking on losses. It doesn't seem to be an alarming number, but there are definitely losses. Private lenders that sell their loans to the secondary market are excited about the 2 rated private lending securitization deals that have happened this year. In early March, Turak Capital Partners sponsored the first ever rated securitization of residential transition loans in the amount of $240 million. In early April, Genesis Capital closed a $500 million securitization, which was also rated. It'll take time for more rated deals to be adopted, but in the meantime, there are a bunch of unrated securitizations still happening. At the Innovate Conference, Ryan Schanberg from Nomura mentioned that the volume of private lending securitizations for all of 2023 totaled around $3.5 billion. In just the first quarter of this year, the securitization volume has been around $2.25 billion. So deal volume is expected to triple or quadruple this year compared to last year. This means that there is a huge appetite on Wall Street for residential property bridge loans, and lots of capital is available to buy quality loans. Although 2024 is projected to be a good year for our industry, many private lending companies are concerned about fraud. The most common fraud by real estate investors at this time is falsifying bank statements. Prior to funding, most lenders need proof that the borrower has sufficient cash on hand to complete a rehab or construction project or to operate the rental property. While many real estate investors are struggling to complete multiple projects, some are editing their bank statement PDF files to make it appear that they have sufficient liquidity. There is technology available for lenders to access borrowers' bank accounts, but it's quite expensive and not used by all lenders. Without the technology, lenders are receiving PDF files which can be doctored with little effort. There is another deceptive practice that some real estate investors are using to get loans, and it has to do with transferring title. What's happening is investors are transferring title to properties from one of their entities to another one of their entities with the intent of making it appear that a sale has occurred with a higher valuation, and then they try to get an equity cash-out loan. Lenders have to research the chain of title in great detail and discover who the members of each entity are. Because of this and other potential fraud associated with equity loans, some lenders are refusing to provide any cash-out with refinance bridge loans. Here's some interest rate data for the first quarter of 2024. According to Lightning Docs, the average interest rate for DSCR long-term rental loans in Q1 across the entire country was 8.12%, and the average loan amount was $278,000. These are the averages of over 3,000 DSCR loans which were closed by lenders that use Lightning Docs to produce loan documents for their deals. Since DSCR loans don't vary much by state, I'll just leave you with the national averages. If you'd like to see the numbers for each state, you can find that information on our website, and I'll tell you how in a moment. Shifting to short-term bridge loans, including rehab and construction deals, the national average interest rate according to Lightning Docs was 11.47%, from 3,800 total loans in the first quarter of 2024. Since short-term loan pricing varies quite a bit per state, I'll give you the numbers for some of the larger states. California's average interest rate was 11.23% out of 877 transactions. Florida's average rate was 11.20% out of 615 loans. The average rate in Texas was 11.28% out of 311 transactions. Michigan had the highest average interest rate of 12.55% out of 68 loans. In addition to Lightning Docs, we have a partnership with LiquidLogics to publish average interest rates throughout the country. They are one of the largest loan origination software companies for private lenders. LiquidLogics has not provided us with the total number of loans, but they are showing a national average interest rate of 11.16% with an average origination fee of 2.5%. The average rate in each state is slightly lower than what we have from Lightning Docs. 10.69% in California, 10.94% in Florida, and 11.08% in Texas. If you'd like to see the average interest rates in each state, simply perform a search for lenders on privatelenderlink.com. This is open to the public. You don't have to register or pay for access. From the homepage, click Browse Lenders, then select a loan type. For DSCR loans, select Residential Long-Term Rental. For short-term loans, you can find the data in 3 different categories: private money, hard money, and residential bridge. All 3 of these terms essentially mean the same thing and typically generate the same search results. Scroll past the lender cards and you'll find a text block with the interest rate data. I provide a private lending industry update every quarter, so be sure to follow us on LinkedIn or YouTube, and subscribe to our mailing list to get our monthly newsletter, which has lots of valuable information about private mortgage lending.